This video is a breakdown of an almost 6-hour trade on Euro US dollar that I posted in real time in the VIP members area. So I just want to break this down for you, go over a recap and show you how this trade played out perfectly. And again, the really cool thing here is that I actually shared this in real time. So this is not like what a lot of people do where it's hindsight analysis, where you have all the information on the chart and in hindsight you can place all your drawings perfectly and then analyze it from a theoretical standpoint and look smart. Everyone can do that, but there's really no skill behind that. So the real skill and the real thing that you want to see when you learn from someone is someone calling it ahead of time based on proven concepts and reasoning, certain setups that happen over and over again, that is time-stamped, and then have it play out in that way, then show you that proof, and then break the setup down so that really it shows you this is an educational thing, and the person who is breaking it down for you, in this case me, is actually familiar with what they're doing, they knows what they're talking about, and they can really help you as the viewer understand this price action better so that you can get better results for yourself when it comes to trading. So as part of my VIP membership, we have a Discord chat group. There's also a members area with a ton of training, a full 50 video lesson course about all these concepts and how to read charts, how to trade Forex, stocks, all these concepts. They work on whatever chart there is, because charts are charts. It doesn't matter if it's crypto or Forex or stocks or precious metals. These concepts happen over and over. The risk management is the same, the trading is the same. So for me, it doesn't matter. Whatever we can trade, we trade. And in this case, it is Forex. So we are looking at Euro US dollar. Inside the VIP Discord, we have this channel here called Forex Charts Discussion, where basically on a daily basis, I share charts, insights, trade ideas for longs and shorts. Okay, so this is the specific setup. Actually, we'll get to this when I break it down. Before I shared the setup that played out, the 6-hour one, we were looking at a setup over here that actually didn't play out, and I ended up getting in that, but I got out at break even again because that setup wasn't as correct as it could have been, and that is part of trading. Sometimes you misinterpret what the actual setup is, but because you only risk 1% on a trade to be able to make 3% or more, it doesn't really matter. Sometimes you get it wrong. Getting it wrong is part of trading. Sometimes there are losses and that happens. Sometimes you get out at break even, which is perfectly okay because no loss is better than a negative 1% loss. But either way, taking a loss from time to time, if you know your system works, if you know your setup works, if you know your setup is profitable over and over, then it doesn't matter if every now and then it is incorrect. And usually that being incorrect is due to either some sort of major unforeseen news event or circumstance. For example, like if there is some global breaking news, or if there is some regular major news event like the CPI data, non-farm payrolls, that kind of stuff can cause major spikes, and it is recommended not to trade when you know there's events like that coming. And then the second error that could result in stops, or the second reason, should I say, is the misinterpretation of the price action and basically just taking a wrong trade. And it happens from time to time, but that is no problem if you limit your maximum loss on a trade to 1%, because when you're right, you'll make 3% or 4 or 5, in this case even 6%. So on this actual development here in Euro US dollar, the first one, I tried to trade, didn't work out, got out of break even, that's fine. And then as the price action develops, I found the right setup. Okay, so that's just the thing. Don't take it personally. You lose a trade, it happens, you move on to the next one. As long as your risk is managed, it's fine, no problem. So that first one, we got out of break even, and then the price developed more. So you can see over here, I was saying this makes more sense. That drop below the low was the first range low sweep. I will explain all of this in a second, by the way. So now we got the better setup, and I just want to scroll down to where it actually ended up. So you can see over here, that is that same chart, and that was the before that I showed you, and this is the after. So you can see over here, this was the perfect setup. We entered over here, and it basically just went up. And this was actually on a major news event. It was CPI data, but on that CPI, it hit the target perfectly technically. Could have actually gotten out a bit earlier already if you wanted to play it safe, but if you would have had that as a target, it would have been hit and then afterwards it dumped straight down again. Okay, but the point is the setup worked perfectly. The target was hit. This would have been a 6R trade. So if you want to join my VIP membership and you want access to this Discord where in real time every day, obviously Forex Monday to Friday, I am sharing these updates, chart analysis, trade setups, then click the link down below. There's a 60-day money-back guarantee, so I'll give you access to everything, my courses, my training, Discord. You get access to me, my updates, these real-time trade ideas, and it is just really a profitable place to be. But enough about that. Let's move on to the actual breakdown. Okay, so here you have it, Euro US dollar. This is its exact trade setup as I shared it in Discord, and I'm going to break it down for you step by step. But as you can see over here, 1 to 6.19. Okay, so we got in a near perfect entry over here after the sweep on the reclaim here of the range, and the target was this high. So let me get rid of all the drawings and break it down for you once again. So what I'm going to do now for you is I'm going to draw it out as it's already played out, and then I will run through the replay mode to show you in real time what the logic and the reasoning is behind here. So what we have here is we have this major wick low and wick high over here, okay? And those tend to be targets. So we could potentially say that this major thing is a range, but at the same time, we are looking for potentially a sweep here of the high or the low and then targeting the opposite direction. Okay, so a point of interest is basically at this point, okay, we have the high over here, we have the low, this is how I would approach it, and after this move, I would also look for adding the Fibonacci retracement over here from wick low to wick high. So as you end up seeing over here, the first time we got this drop only into the golden pocket area over here, and this was the first time when I was incorrect about defining that as the actual range rather than having it swept over here. Okay, so the first time what I did is I thought that this wick high to this was the range and that this wick below it was potentially that, and that was incorrect. Okay, so that's where I got out at break even again. That was perfectly fine. Now what ended up happening is with Euro US dollar specifically, it tends to go to the 0.70%. You will see it over and over and over and over again on the lower time frames, on the higher time frames. It just does this over and over. But the interesting thing here also is that this could now potentially be seen as a range from wick high to wick low over here. So what we do then is we take the parallel channel, we take the wick high over here, and we draw that as the top of the parallel channel, and then the bottom is the wick low. Now, the rules of the range are simply that we wait for either a sweep of the high or a sweep of the low, reclaim into the range, drop back into the range, and then target the opposite direction. So by removing the other drawings, it makes it more clear for you. This is now a range over here, wick high to wick low. We wait for a sweep. So we do nothing here, and we've identified the range. Now we got our sweep over here, and this is an hourly chart. Usually I would like to zoom into perhaps at least a 15-minute chart, maybe even a lower time frame than that. So we got the sweep, and then we got back into the range over here, and this basically gives us our trigger criteria of being able to take the long position over here. So once it got back in, you could have gotten in over here or so. The stop would be the wick low, and the target would be the high over here of the range. And then once you're in here, you can see this is 4.85. So it really depends a little bit on where you entered. If you waited to for the drop back here, you can see that's about a 1 to 6, which was more similar to where I got in. So this was the setup, and basically you're risking 1% here. If the setup is correct, it's not going to drop back to hit your stop loss, and then it would go probably at least to the mid-range over here, which would have been about a 3R. But you can see even if you had your take profit target here, it would probably have gotten triggered, even though it was very much quickly on a wick. But technically, you can see ever so slightly it got above this high. It would have been a bit more cautious here. You could have already seen if you were monitoring this trade, you can see when it took out this high, that would have already been kind of a sign you could have gotten out over here to be more safe and you would have easily gotten out. You can see if you reduce that to here, that would have still been a 1 to almost 5 risk reward. It was an incredible setup. Usually I look for 1 to 3 as already being good. 1 to 4 is great. 1 to 5 or 1 to 6 is already phenomenal. So this was basically just the setup, and you can see the logic behind it. Very simple. It's a range setup in confluence with that fib golden pocket that makes it even more likely. So the more of these concepts you can stack as reasoning behind why the trade is valid, then it just makes it higher and higher probability. So this was a range setup plus a wick into the 0.70, a bounce. This just makes it much higher probability, in my opinion, having both the range in confluence with this fib 0.70. It doesn't always happen this way, but in this case, it just happened to play out that way, and it was just a fantastic trade. So what I'm going to do now is run you through replay mode. This is a cool feature in TradingView that allows us to play like live what the price action is and allow you to practice in a simulated environment but with real market conditions. So you already know I've broken it down for you with the thought process behind it, but let me show you how this works in real time. So what we do is we simply select the replay mode over here, and we're going to start from roundabout over here. Now I am going to set this to 15 minutes just so that it's a little bit faster, otherwise it takes forever to play out. And as you can see right now, we are now in a situation here where the price action is yet to play out. So we do have the controls over here where we can simply play and pause, and I will try and walk you through the thought process as is. So at this point in time, what do we have? We don't really know what's going on here yet. What we can see here, we're not taking any trades. We have a high for now over here. We have a low for now, and we're here in the middle, so we're waiting for some sort of setup to develop. So now we let it play. You see, by the way, and this is obviously not part of the setup, but this also plays out in this exact way. We had a low, we had a high, it took out the low, and then it went to the high. So even though this was on a news event, this could have potentially also been tradable, but it happens so quickly with these wicks on these news events, so that it wasn't really the trade I was looking for, and I try and avoid to trade during those massive volatile events. Okay, but you can see it's the same concept. You create a high, create a low, it chops in between, it takes out the low, and then it takes out the high over here. So now we have these two new highs, and we can change how this works. So now we move the points of interest to where these wicks are now. They've already created this, now we got this, okay? So now what I also look for potentially, I like to put this fib golden pocket on here as an area of interest. So we had the move up, right? We swept the low first, went up. So potentially around about this area over here, I might be interested if it does come down in some way for a run back up. That is just the potential idea behind it. We still don't know anywhere at this point what is actually going to happen. It is just a level of interest, and now we let the price play out to see if at some point it's going to give us a setup. So let's let it play out. So you can see here perfectly into this Fibonacci golden pocket, and this is the idea. And this is where the first time I made the mistake of defining the range in the wrong way, because what I did here, okay, so we took the range, we took it from the high, and I said, okay, that's the range high, and this could potentially here be the range here where it swept the low and now is going to continue to the target all the way up here. Okay, that was the first setup, and while that could have played out initially, once it got back in, right, what I was looking for was something like this, watching it on the lower time frames, so this is 15 minute, watching on the 3 minute or the 1 minute, and this could have potentially been the trade. And as you can see here, that is a massive risk reward where you know, you can be wrong more than 50% of the time easily and still have it be very, very profitable at this point. But okay, that's the one I tried, and you can see over here something like this, and at this point I was looking for, okay, it's back in the range, I'll move the stop to break even, there's no risk there. So as you know what already is going to happen over here, you see that could have still been a profitable trade, right? You could have still taken here if you would have gotten out. Look at this. you could have still made almost a 3R. So the setup here was still valid, but it wasn't the ultimate setup that took us all the way back to the top. So because I was looking for this to play out, once I was in the trade at this point, can easily just move the stop to break even. There's no risk. So sure, you could take 1R or 2R or 3R here, but I was looking for a run to the top, and sometimes it just doesn't work in that way. So I had the break even here. There was no risk if it were to drop back because I was going for all the way. And you can see here actually even how far it ended up going. You could have here, even past the midway point, you could have gotten as much as a 4R out of this trade already. So actually that initial setup was really a good setup over here, and it could have gotten you as much as a 4R, which is already a fantastic trade. But you know, if you are greedy, and sometimes it happens, in this specific case I wanted the full trade, so I didn't take any profits here. I put the stop at break even, which is fine. I risked the open unrealized profits, and look what happens now. See, so we got out of break even here on this drop back, and it would have stopped us out if we didn't get out of break even. So it was a really good decision to at least reduce the risk that saves a loss. And then this trade didn't play out in the full setup. So you can see while there was still potential here for a 3R or a 4R, which would have been a great trade already, at this point it came back down. And where did it come down to? You can see exactly this 0.70, which it often does on the Euro US dollar. This pair specifically, you can see here it tagged that 0.70. So at this point, this setup is invalid. Right, we got out. Could have been profitable. This time it wasn't for me personally, but that's fine. We got out at break even. So now we can reassess what is really happening here at this point in time. We got out, it hit the 0.70, but it bounced. Okay, and that is what I want to see, especially on the 5-minute charts here. You can see a bit better here. 15 minutes is just 1 wick. As it goes into the 1 minute, as I was watching this, it just gives me the idea, okay, maybe the setup is still valid, but it is a little bit different to what I initially thought. So then I look at the chart and I look, okay, this range, the high is still valid, but maybe what if this wick, this earlier wick over here that I thought was the sweep, was actually the low of the range, and what we got here, now that it dropped into the 0.70, was actually the sweep. So that gives us another range setup where the target is still the highs over here, but it gives us this entry over here. Actually, when I was watching it, this is the replay, okay, so you would have entered here at the range, would have been looking at this on the probably the 1 minute chart anyway, and the target would be here, the high over there, exactly that wick high, because that is still how the range setup works. So the fact that it did end up tagging the 0.70 and then bounced, that gives us a good chance that this is the actual setup, and this is the setup that ended up playing out. So you will see now, I will let it play out, and then you can see how it works. Okay, so just to pause it here real quick, as you can see, it's developing very nicely. One thing that you can watch here, and especially since last time it stopped me at break even, a cautious thing here would be is once it took out this previous high over here, you could already exit over here, and that wouldn't give you the full 6R, but I mean, it gives you here another 4R. And for this trade, that's where I ended up getting out for the most part, because I had already watched 4R turn into 0, got out of break even. That was frustrating. We're back at 4R. That's a phenomenal trade. I'm ready to get out. And you know, yes, I could get an extra 1 or 2R, but I'd rather lock in the 4R and be happy with that. So at this point, personally, I already got out, but I just want to show you that the setup actually did end up playing out. And there we go. So you can see it just wicked above here. You can see very slightly. So it hit the trade target. It just wicked above this high ever so slightly. That was the technical objective. And this was the CPI data. So on that news, it wicked up very quickly and then completely dropped. So that is also one of these dangers as you're going into big news events. You want to try and avoid with Forex, but also with stocks and even with crypto. You want to try and avoid having major positions going into these massive news events like CPI data or non-farm payrolls or FOMC interest rate decisions, because you get these massive movements and it happens so quickly, you're not going to be able to react. Number two, your take profit targets might not get hit. So if this was an order and it went super quick into it, it might not have triggered and you end up with a big loss. Or if you're wrong and it goes against you so fast, even if you have a stop loss, it'll just skip straight past the stop loss. You can blow your entire funded account with just one trade, even though you have a 1% risk with the stop loss. With these news events, if it blows past it, you can blow the whole account. You can hit your daily threshold very, very easily. So that is why with Forex, you want to pay attention every day. You want to look if there are major news events, and you don't want to have open positions, especially big size positions. You know, if you're in a swing trade and you're in a massive profit, you're hundreds of pips in profit, it's a small position, and you want to hold that for weeks or months, that's a bit of a different story. But if you're going for these higher leverage, smaller movement, good risk reward setups, you don't want to do those going into those news events, because you can get absolutely wrecked with that. So if you see specifically CPI, non-farm payrolls is the first Friday of every month, and the FOMC interest rate decisions, those ones you want to avoid. But keep an eye on the calendar every day, just check if there's a major news event. And then especially something like this, where we were going into CPI, because obviously we know that's coming, it's a scheduled event. At this point, I'm up 4R. I don't want to risk giving back those profits. I'm happy to take the 4R. That's fine. Let me take it. Great trade. And we move on to the next one. So that is how this setup works over and over. This is the thought process. It's the same concepts. The range setup, the fib golden pocket. And I hope you enjoyed this breakdown. And as you can see, I shared this in real time in Discord inside VIP. So if you are not yet a member, if you want to join us, click the link down below. You will get access to not only the Discord with access to me and more than 2,200 members from around the world, my real-time analysis and insights on a daily basis into the Forex markets, stock markets, and other financial markets. You will get access to all of that, plus access to all my courses in the members area, which includes a 50-lesson trading course. Okay, so there's more than 50 video lessons breaking down all these concepts that I just showed you here in this video, how to do ranges, how to do the fib setups, what the market price action goes after, liquidity, market structure, everything is there. All the concepts I use, you can self-study in that course, and it is all available to you right now. The link is down below this video. Come and join us in VIP. It's literally risk-free for 60 days. You can join today, you get access to everything. If you are not happy for any reason, or you decide it's not for you, whatever you want, you have 60 days to change your mind and request a refund. There's no strings attached, there's no conditions to that. All you have to do is email support within 60 days of joining, and you can get a full refund. So there's literally no risk to you. I've been doing this for years and years. We have over 2,200 members who all had that same refund policy, the ability to get their money back after they joined, and they all chose to stay. The value is there, what I share works. And as you can see here, this was just one trade. Okay, we had another trade in Euro Japanese Yen this week. I will break that down in another video. That was a 7R trade as well. So that's literally 6 and 7R in a week. 2 trades just like that, both based on the same concept. That is a 13R, 13%, while only taking a 2% risk or 1% on each trade for a total of 13% upside. That is insane. That would have passed a funded account with minimal risk. This is just completely worth it in my opinion. And you can come and see for yourself. That is why I'm offering the 60-day money-back guarantee, because I know what I teach here works. I'm doing it over and over and over again. So come and join us in VIP. Come and learn. Come and be part of the community. Click the link down below. Sign up. You still have those 60 days to change your mind if you wish. But I think once you join, you will see that it is just going to completely change the way you trade, the way you think, the way you invest, and much more. So hopefully I will see you on the inside. Thanks for watching. I hope this makes a lot more sense. Click that link, sign up. I will see you on the inside.